All right, so welcome. We are going to chat a little bit about Starbucks today and a little bit about buying the dip strategies here. So I'll give you some thoughts and insights here on that. So we're going to kick things off and just give you some ideas and tidbits. Keep in mind, none of these are recommendations to buy, sell, or trade anything. It's just my own personal opinion. All right, so the reason I decided to go with Starbucks today was just because it's a stock that's beaten up. A lot of people like it, that kind of thing. So we're going to go ahead and just check out Starbucks. You could apply this strategy and concept to just about anything, but really what I'm looking for here in this strategy is we're kind of buying the dip. So before we even get there, let's kind of take a look at what's going on with the overall market and where it's been going, what it's been doing, how it's behaving. So first off, I like to look at it from an energy standpoint. Like, what kind of energy does this market have? And I will say it's been choppy. Look, we're way up here. Everything's all good, all calm. Go ahead, grab your ice cream and popcorn. No problems here. And then we start getting a little chop, and then boom, you get a flush down. Okay, we go right back up, and then you get a secondary flush. So in this recent time frame, I would say this has been choppy, and you can kind of think of it more like a snowstorm. You can think of it as a tornado or hurricane if you live in Florida. So there's been problems. So you want to be very careful with what you're doing and what's going on here. We are basing around this 4,300 in the SPX, kind of creating a base. Not saying it's the lows, but we're creating kind of like a little base. But it's important to understand, hey, we are choppy right now. So with that, you have to be very careful as you approach these things. So I'm looking for other stocks that are beat up. So let's just say things like PayPal, because we're looking to recover, right? After they've been beat up, you're going to go in the hospital bed, you're going to take it easy, you're going to lay down. So it's the same thing. We're laying down, we're going to look and start recovering. And that's what we want to do. So if we look at stuff like PayPal, like they've been talking about CRM here, even Square here as well. So a lot of these stocks, even, Netflix, Facebook. So a lot of the stuff that we're going to talk about right now, you can apply it to all of these stocks. I'm just doing Starbucks. It's a little bit less capital intensive, I would say, Starbucks. So we're going to go that route. So as I look into this stock right here, what you can see is if we go into the weekly, just like many of the other companies here, it went up. We kind of based here at the top, or just went a bit sideways for a little while, almost a full year. And we pulled back, and now we're trying to base again. So it may feel a little scary to kind of get into it, but as a long investor, right, if you're trying to hold something for, let's say, 3 years, you're not going to let this stuff shake you out. You're like, okay, well, 3 months later, I'll buy some more. 3 months later after that, I'll buy some more. So that's kind of what we're looking at and thinking about here as well. So if you're looking to buy the dip here, I'm looking at the 90 level because already we're kind of basing right here from the gap. So you've got this gap over here. Yes, you could go lower, but I'm kind of using this as a justification of, okay, well, I could always set my stop right there if I really load up on a position, and then again, buy more later down there somewhere or wherever it goes. I don't know where it's going to go, but it almost seems like the odds of going up are a little more in my favor now. Right. So if I'm a long investor, then I'm looking for this to kind of power higher. 90 seems to be a good approach. So what I'm doing is, as I'm looking into this, and I see it's kind of basing, and it's basing right here. So I'm trying to, budget for this to probably go a little higher. I'm also watching some of the technicals a little bit, but it doesn't mean it will go higher. It's just, hey, I'm positioning myself. So the way I like to start approaching some of these things, and you can see some of the Apple trades, some of the stuff I did in the past here. This is a back ratio spread. You could go a little more cautious on these things. So you can see something like this, which has a couple of an extra put or so. Or you could be a little more aggressive, do like a call spread. I'm just going to go out with a sheer put vertical. If you're a little more aggressive, you could go in, and if you have more cash, you could just go with a simple put. So I will do one example of a simple put. So just like if you wanted to own the stock, right now this stock is kind of, you could say, hey, I like this stock if that's in your mind, but I'm not sure I want to get that invested in it. So what you could do is sell a put down here, and if it keeps going lower, you're still going to be able to own that stock at a lower price. And that's usually good for people that have a little more capital. So that would be another 7 to 8% pullback. Okay, so if we're looking at something like this, what you could do is go in and take, a 37-day option or so. And I could say, okay, well, for waiting, I could do about an 85, I could do an 87. You take your pick, how far down you want to go. and where you're willing to feel comfortable with owning that stock. And here, let's just say I want the 85, but I'm making $1.18 on the premium. If that's not enough, you could go longer duration. You could say, okay, now I can make a $1.42. Now you might say, hey, that's too long. Well, there's a trade-off. You either go more money and you go longer duration, or you go shorter duration, but you make less money. Okay, so it's a question of like, hey, where do you want to be positioned? So if I do the 85, I could just go out and just sell that that single on its own. And right here, just go in and basically you can confirm and send, but I'll show you the way it looks like. So right here, I've got this basically selling at about $1.18. Okay, this doesn't look right because of the date. So there you go. That looks a little more even. So here we go. So if I sell this for $1.18, if the stock stands still or goes up, I make $1.18, $118. If it pulls back to about $84, $83, $82, I have to get assigned at 85, which means I own 100 shares of that stock at 85. So this is one approach. I could go ahead and do that. And if you have more capital, you could do that. It will go in and margin you out for $8,382, because if you're making if you're buying the stock at 85, that's 8,500 minus the profit you're making is 118 on the credit. So you're basically going in and you're pushing that order through, and you're like, hey, I'm good to owning that stock at 85. So there you go. You push it in, and now you're like, okay, I'll buy more 100 shares of that stock as it comes back into me. So it's a good way to kind of say, hey, I'm okay with the market, but I don't want to be that aggressive. So that's one way of approaching it. If you have a little less capital, or you want to be even more cautious, another way to do it, I'm going to go ahead and do kind of this 43 day, just a little bit different. I'll go to the 85s as well here. So what I will do is go to the 85s, but then I'll buy the 80s as protection. Now I don't make as much here, okay, but my capital exposed is a lot less. So I'm basically aiming to make about $63 at expiration, risking about 437. So if I look at it, 63 on 437, you're looking to make 14% in about a month and a half or so. And you could bump up a little more contracts. Now, normally I would say, hey, spread your money, spread your risks. But this is one way of doing it. You can say, hey, look, I'm going to go ahead and spread a couple more contracts, risking about, let's go with about $2,000. So I'll do 5 contracts here to try and make about $315. So splitting up something like this is very similar, because you're trying to buy the dip. Now, yes, if it goes down to 83, you still get a sign. Now, if it goes past that 79, 78, now you've got those protections at the 80. But anytime you're short contracts, even if you're 85, you're still basically going in and you have a high degree chance of getting a sign, especially if you take it to expiration. Now, our objective here is not to really hold it to expiration. Maybe if it pulls back a little bit, what's going to happen is these deltas, I'm basically buying 50 shares here, 47 actually. That's what the delta is telling me. So if this pulls back somewhere here, I'm going to build up and accelerate in deltas because I have a curvature. So as I go here and I'm bumping up to 68 deltas, I might actually want to move this over and reset it to more about that 45 or 40 delta range. So this way I can kind of stay a little more stable, because with options, you've got soft deltas, they change. With stock, you have hard deltas, they don't change, they're linear. Okay, so here, as we go in, I'm going to go in and push this one right here. You can do 5 contracts right here. We'll build it out. Okay, and I'll show you some other things you can do with it as well. Actually, I'll just leave it in the regular area. Okay, so we'll start building this out, and then I'll show you some more things you can do with it as we start going. Okay, so that's kind of the next approach or next step to kind of being a little more bullish on certain stocks. Again, you're looking for an upside, just like a long investor would. Okay, so now let's break this down. Okay, I have 46 delta. This basically states I have about 46 shares. So if the stock goes up $1, I make $46. Okay, I have a theta of 4.258, which means daily I make about $4 a day from the time decay, or the theoretical time value of expiration. Okay, and a Vega that's negative, negative 14 Vega, which is nice to be in market conditions that are like this. So if we have a volatility or a VIX here, and just take a look, we're starting to drop a bit on the VIX. You know, the fear of the Ukraine and the fear of just the Fed starting to subside. We're kind of in that upper range right here, so we're starting to subside a little bit. So if we really start getting under this, then you can really start seeing maybe stocks rally a little more and more. But right now we're just kind of hitting a high there, and it's really subsiding a bit. So anyway, so as we look into something like this, we do want to be a little more negative or short Vega because volatility is at the upper end or upper range. So this is why I'm kind of nibbling on something like this. Now, the one downside with nibbling on a big update here, so we've got like kind of like a big update. We're still, remember, in a choppy market. It's kind of one day. This thing could roll back at any point, but it's a starting point. It's one way to kind of start things out if you look at it. And I'm looking at, hey, this could be good for the next 30, 40 days. I'm not looking for it for just the next 2 days or 3 days. I'm saying, hey, we're coming in and we're basing at around 90. And, you know, I believe that that's a good risk to reward kind of concept. And as you start evolving this a little bit, you could start skewing other trades on here. So for example, if you say, okay, well, I want to go ahead and change this up a little bit. And what we can do is actually start manipulating things a bit more different. I could throw in some cheap, let's say 43 days out. No, 43 is probably too far. Let's do 37 days out. And I'll go maybe $100 right here, a calendar. Now, why would I do a calendar? Because it's super cheap. And the reason why I would do it, sorry, not super cheap. It's because if I want to protect myself against a Vega, going higher, this won't be affected as much because I got a positive Vega. The other thing is it is a little less expensive. I'm putting on like $20 of that spread, but I'm taking a very bullish stance on it, which is the delta, which will help offset my Vega. Now, if you have a little bit more rotation to it, because what you're seeing here is we've got some strikes here. If you can get a little rotation, you can customize it and turn it more into a diagonal. We'll see what the strikes are. Those are not traded. Let's see where I'd have to go. I think I'd have to go to probably about a 95 here. Yeah, there we go. So I'd have to go to a 95. So this would be kind of a covered call alternative here with this. But I think the rotation's a little strong right away. Unless you're very, very bullish or, you know, you're just putting on one spread, you could do something like this. So this is why a cheap alternative would be just to put on a simple little calendar, because now you're exposed bullish, but you're not that aggressive on it because, hey, I want to be bullish. I'm just cautious. The market's choppy. So putting on something like this is very cheap. It's $20 for the spread, and you're trying to make maybe $10 when it goes up. So it's like 50%, but it's got to move in your favor. So doing something like this could be nice. Yes, the Vega is high and the volatility is high. And that's why I want to be a little extra bullish on something like this, because I need that deltas to offset my Vega problem that I'm going to experience. So this could be another way to kind of play this and start putting on something like that. And again, I'm just building out the long portfolio. I'm building out the bullishness of things. And as you start building that out, you'll have a mix between, you know, positive Vega trades and negative and short Vega trades. And you can see now I've got kind of this concoction of some spreads when it comes to SBUX. Okay, so as we get into this, you kind of then wonder, okay, well, what about my plan? What if it starts getting against me? Well, what you start doing is you start evaluating your deltas here, and you say, okay, well, how do I start trimming that a little bit? Because if it starts going back down to 85, that starts to pick up deltas and speed, and that's becoming a problem. So how do I start trimming things? So as it starts going here, I don't want to make the adjustment over here. Like if this is my max loss, right? Like let's just pretend this part right here is my oh no moment. Well, I don't want to make tweaks at that level. I'll probably start making tweaks when it's really pulling back, maybe under the 90. So 89, 88, somewhere around here. And I'm going to try to slow this curve down. And the way I can start doing that, and I'll show you the way I'll do that even right now, is that if we go in and we're starting to look at our deltas. So I've got one right here that's a put that's naked. It's basically on its own. It's not protected. one way to do that is, hey, take this 20 and let's sell a call against it. And, or you could just totally take it off. But if you didn't want to move that position, you were okay, you just want to slow it down. What I'm looking at is, okay, my delta is 70. How do I get this down to a delta of maybe 20 or 30? Okay, so how do I go down to a 20 or 30? So I got one that's a 20 delta positive. So why don't I go in and, you know, take this. I've got an April 8th. Okay, so April 8th. Let's take this April 8th and let's go in and sell the 103s now on the call side. Okay, and that'll give me negative 11 deltas. So what you're going to see here happen is that I'm going to go from a 71 delta. How do I slow it down? I go ahead and sell a call. Now I'm going to slow that down. It allows me to collect more premium. So look at this theta. I got 10 in theta now, okay, rather than 8. So it'll pick up my theta. Yes, it does increase my risk exposure on the upside a bit. So you can see right there. And I could sell something like this. So that's kind of like part one. Could do something like that and get that going. The other thing is we could do the same thing just like with the vertical that we had before. So here we've got this one and sorry, this one is the calendar. Let's go into these puts right here, the 5 puts that I have. Okay, so what I can do here is now go in and sell maybe the 100, 105 area, because this is probably the largest chunk of my deltas. I got 5 contracts, so it's about 10 deltas a pop. So I got 48 deltas just from here. So how do I trim it? Well, what I can do is go into the April 14s. Okay, so April 14s. And then what I'll do, there's my puts over here. Okay, I'll go ahead and sell some over here. Now the problem with SBUX is the premium's not as big, so you do have to go in and kind of get it a little bit closer in here. So I go in and sell some, and I don't want to negate my other position, so that's why I'll go over here, go and do something like this. And if you want to just slow it down, I don't have to go to 5 contracts like I do over on this side. I could just go in and do 4 contracts here, and that should slow me down a little bit. Okay, so that'll cut my deltas to 26 just on that spread from 48. So I'm going from 48 to 26. So that's a pretty significant move and cut. So we're going to go ahead and do that as well. And then you'll see here how that plays out. Okay, so I've got one that's a single here that's also kind of working. Let's try and cancel and replace. Let's see if we can. There's this one. Let's see. What do we've got here? Working order. Where are we trading at? 40, 46. It's just probably not getting filled right now on that other one. Okay, so we'll hold off on that for a second. But you can see I'm down to about 48 deltas. I still got one working. And then, you know, the calendar there that we've got right here. If that was getting in trouble, I probably would just leave this one on almost till expiration. Why wouldn't I bother trying to fix or correct this one? Because there's not a lot of capital involved in it. It's only a $20 spread. It's taking a cheap shot, trying to see if it'll pop a little bit. So that's why I wouldn't really do too much adjustments on this. I'm just trying to trim my big deltas and trying to slow that down. So anyway, if you're struggling getting filled on something like this, you know, I could try and switch it to a market order. Not that I would recommend you doing that. Be patient, but for video purposes, I'll try and push it a little bit. Let's see if it gets filled. Anyway, but that's the goal. Is just we're just trying to cut and trim the deltas. And I could just do it also in just the vertical spreads as well, rather than just doing it in this one, because maybe that spread's not working very well. So let's go in and instead of 4 here, because let's see what deltas we're on right now. We've got a 48. So if I want to go ahead and trim the deltas even more, I could do another 4 right here, and that'll bump me to 8. And then I'll be down to about 27 deltas right there. So there you go. So now I've got this spread that's a little funky, and then I've got a little bit of a calendar over in this area here to kind of offset some of that. And I've got a little bit of a different spread. Now I'm still bullish. Now this spread is still bullish. Why is it bullish? I've got a big short Vega still, and I still have a positive delta, so I still need that stock to go up. I still got a positive theta, and I got a short Vega. So as it goes up, that short Vega is going to help me. So even though it appears like it's non-directional or neutral, it's kind of almost appears like an iron condor. But I'm just showing you like different ways that you could spread this out and different ways that you might experience these positions as they start coming along, that it really doesn't matter what you start overlaying one on top of the other. You're just looking for, what is my delta, gamma, theta, vega? What are those numbers telling me? And in this case, in this position, this is still a bullish trade simply because of the delta, the vega, the theta, the gamma, all those things are lining up and telling you that it's kind of a bullish trade and bullish setup. And as it starts running and grinding against you, maybe in other directions, you can peel off some or one side or the other. So that's how you can kind of manage it. It's kind of like trying to wiggle one end to or another. You know, you're trying to kind of balance the seesaw effect. So anyway, I hope that helps. That's kind of a little plan idea for SBUX. Is I'd probably start it off, you know, a little bit more bullish, and you know, and then you can start increasing things and adding more things into it as you get better and better, or as you start putting on more risk. And then what you can do is, if it starts going against you, you could slowly start trimming your deltas and getting it back down. But you have to know your starting deltas in order for you to know, hey, what am I trimming to? So recognize, what are you starting with when you start out your initial positions? Like right here, if you're starting out with something like this, hey, I'm starting out with 48 deltas. In that case, then if you start picking up speed and you're like at 50 or then 60 deltas or 70 deltas, you know, you probably should trim, and you can trim down back to where you were, or even a little extra just in case. You know, so here, if I bump up to like 80 deltas and I was at 48, I'm almost doubled. I could trim back down to 35 even, and just to tap the brakes a little bit extra because I picked up some deltas along the way. So anyways, I hope that helps, gives you a little insight here on just a little trade idea and strategy for a setup on SBUX and how to work the trade. If you have any questions, feel free to reach out. Hit a thumbs up if you like. If you don't like it, hit the thumbs down 2 times, and that should also work as well. And check out the TRADERSFLY site. I think the team got the trading journal up for the freebies to download. And we just wrapped up the live class for the risk array. So that's, we're wrapping all that stuff up on the website. And we've got another class that I'm working on right here for market seasons. Just like right now, we're in a seasonality of different kind of conditions in the market, with being a little choppy. We're going to be talking about different types of conditions here in the marketplace, whether, you know, we're getting into a nice sunny condition, a summertime, buy the dips, or maybe you know, what kind of strategies would you deploy in different conditions, sideways markets, up markets, down markets, that kind of stuff. So that's what we'll be getting into a little bit later. So anyways, thanks so much for joining me. Enjoy the rest of the week ahead, and I will see you guys next time.